to talk about the market action, folks, we're going to be joined by our man Tim Ord. You can check out Tim's website, folks, ord-oracle.com. There he is right there. And then don't forget, under the services tab, you head on over to TFNN.com, you hit that services tab. Tim's got 2 great webinars, The Secret Science of Market Tops and How to Identify Market Tops, and 6 secret ratios every trader should know. Tim Ord, good afternoon.
Good afternoon. Actually, the market looks...
where do we, a lot of talk of metals and silver continuing, and the market, man. What do you think about this market, Tim? Great calls recently, man, Tuesday as well. Pretty remarkable price action. What do you think?
Yeah. Do you want to cover the S&Ps first, or we should just...
Yeah, let's do the market first, if we could, please.
All right. This is the ARMS index, the 10-day trend, which is most important. I got the bottom window is the 3-day trend. Next one's higher 2-day trend is a 5-day trend. These two lean bullish, but the 10-day trend is most important because that's 2 weeks of panic. So we're making a significant low of some sort here that's worth hanging on to the S&Ps. I kept in my S&Ps, even though we pulled back here a couple of days ago, close to 2%. But with the trend going up on the 10-day up to 1.9, we're not starting any meaningful decline here. That was just a shakeout and an uptrend. So I'm staying long. I don't see any trouble here. Matter of fact, that chart, I think this is a chart we talked about Tuesday. We talked about the top window is the SPX VIX ratio, and this is the SPS, the SPY. And I got Bollinger Bands on them, and I was talking that you get below the Bollinger Bands that quick. Normally we're at a low. We happen that there, and even this last time we had that pullback. In other words, the market got stretched just too far and needed a snapback rally, and that's exactly what happened, because you had the SPY VIX ratio get below the Bollinger Band, and you also had the SPY getting below the Bollinger Band. So the market just snapped back. Can we have a test? Maybe. I don't think it's going to happen of the recent low. I don't think that's going to happen. I think in general we're just going to move higher here. So it looks pretty good. This is a quick view of the bigger trend. Normally the top window is the SPY. Next window down is monthly VIX. The bottom window here is the SPX VIX ratio. So normally the VIX will start going up before the top on the SPYs, and it's sometimes, majority of times it does. Usually gives you a warning, and all these pink areas are times when the SPs were going up and the ratio was going down, and it did a decent job of picking out the highs. We had last one we had in early or late 2024 or the early 2025. Right now, we still got bigger, higher highs. There's a minor divergence right there on a weekly time frame. But if the SPs hold steady, if not move higher, going into the month end, we got another week to go, that minor divergence will go away. But my point is, it's not showing anything major divergence going on here. We got a minor one, but nothing major. This chart on the monthly time frames usually pick out the big moves, at 10% or more. So I don't think there's a 10% decline right in front of us at all. Maybe some minor stuff, but in general, I think you should hold your, if you're in the market, it looks okay. I think we're going to move higher. So actually, I'm going to flip down a couple of charts here.
Okay.
This is kind of when I get the point across. We look at the shorter term pictures, but this is a big picture. This chart goes back to, lost my tool here. For some reason it's not working.
That's all right. And you're going to be comparing the XAU and the SPX, right?
Yeah, we're comparing here. Too bad we can't get this thing to work. I don't know what happened.
That's all right. We can see your cursor as you're jumping around.
Okay, you can, right? So,
yeah.
But anyhow, this chart goes back to 1982, and we built a trading range from basically 2014 to current time frame, and we just popped above that trading range. It was
Nice.
0.05 down to, I don't know what it was on the low end, but anyhow, it went sideways for 10 years. And XAU to the SPX ratio on a monthly time frame, when this ratio is rising, that means gold stocks are outperforming the SP stocks. When it's declining, SP stocks are outperforming the XAU stocks. And we just broke above that trading range. So 14-year trading range, we're breaking out of it. We close, well, the month's not closed yet, but we're at 0.062 right now. And so I guess you can pull back to now supports 0.05. But in general, we're going to work higher, probably all the way up to 0.15. Well, 0.15 is 300% higher than 0.05. What that implies is gold stocks will outperform the equity market 300%. So let me say that again. So this is just ratio analysis. So if this ratio does go to the next resistance, which is basically the 2010 high up here, that ratio will reach 0.15. So that's 300%. You take 3 times 0.05, you come up 0.53. That means 300%. So these gold stocks are still, in my opinion, the early stages. I got cycle analysis that says this rally we're currently in right now, and probably still in the early stages, could have lasted 2036, which is basically 12 years away. So this is going to go on for a while. This was probably, back in 2002, it went from basically 2000 to 2012, the market went up 12 years. So something similar is going to go on right here. So these stocks are though they're breaking out. Let's actually take a look at the current health of the market.
Can I just real quick, because it's so cool, man, how you do that. And I was just looking at the XAU, of course, and then you look at the XAU and you're at like 426 right now. Right, and what do we have? The S&P 7,000 or something like that. So it's like, wow, okay, that's a lot. Remarkable. Last year the XAU's at 100, and the S&P's at like 5,000. So it's pretty crazy, right? And that's what you're pointing out. Just to put, when you break down those prices, that it's remarkable that when you do the comparison of the ratio, those numbers, that wow, you would have needed almost 50 shares of the XAU to hit a share of the S&P at the beginning of last year, and now you only need like 15.
Yeah.
Isn't that cool, Tim? Right? I mean, that's what that ratio is saying, basically, which is remarkable on a percentage basis, that comparison.
Yeah, I want to point that out.
All right. Sorry to stop you there, but even I'm looking at that, man, and saying, man, that is intense. All right. We're going to keep talking metals with Tim, folks. We're coming back. We'll come back with Tim Moore. Stay tuned. Welcome back, folks. We got the S&P's up by 26 points right now, backing off from those session highs, but market's in the green. We're talking to Tim Ord, and don't forget, folks, you can reach Tim at his website, ord-oracle.com. And then he's got 2 great webinars under the services tab. We talk about some of these ratios here, folks. SPY VIX. Hey, Tim, could I ask you real quick when we jump into metals? We got a question in the den talking about the TLT. And the SPX TLT ratio. Right. I know you don't have a chart prepared for it, but have you been watching that? I know that's breaking out a little bit. What do you think about that? Any opinion on that? I know you follow that ratio.
In general, it's not showing a divergence at all. A lot of times that ratio will start to decline as the SP's going up, and it's pretty much holding steady. It's not staying a lot right now.
Okay.
I haven't really covered a lot, but it's actually it's not bearish at all. It's leaning bullish, I guess you might say. As the S&Ps are making higher highs, that ratio is holding pretty close to the highs. So nothing to really say about it right now. It kind of just, leans bullish. So
awesome. Appreciate you covering it. All right, back to metals, please.
All right, back to metals. But anyhow, so how long is it going to take from 0.05 to get 0.05? The only reason why I say this 0.15 right here is the highs up here. Normally highs are resistance or lows. This was a low back here. So we've gone sideways. We're breaking out. It's a 14-year base. So it's a long time. So this is going to be a long time rally. The longer the base, the longer the rally. Can the rally last, 14 years? Well, I'm thinking it could last 12. So that's my view on that. But here's another kind of a ratio, kind of doing the same thing. if you can kind of see it right now, we're basically going above the previous highs. Excuse me, this is the monthly XAU gold ratio, goes back to 1982, and it's also had a approximate 14-year base. Is also breaking out. In other words, gold stocks, when this ratio is rising, are outperforming gold, and vice versa. If this ratio is declining, gold will outperform the gold stocks. But right now, gold stocks have been outperforming gold over looks like about a year now, because we're in 2026. The rally started in 2025. But I think this ratio is going to go, I don't know, 0.16. Right now, we broke above, basically that previous high was approximately 0.08, so that would be a double approximately. Gold stocks outperforming gold by 200%. So there's a lot of stuff that these gold stocks are probably going to be like the dot coms back in the 90s or something. A lot of these gold stocks are just going to fly. So which ones are they? We're kind of skipping around here, I know, but I just wanted to get.
No, I like it. Keep going, man. This is metals. In focus, of course. Please keep going. It's great stuff.
All right, this method works really well. Last time this happened, this is a monthly chart. You always start with the biggest chart first, because if you get the monthlies bullish, the weeklies, the dailies will all fall in place, because the monthlies rule the weeklies rule the dailies, and all the way down. So you want to have a bicycle on the monthly chart. So as long as that bicycle's in force, I guess you might say, it's bullish. When it's out of force, it's bearish. But anyhow, back in 2016, this, I don't know, call it 2 cents, 3 cents, and it stayed on a bicycle. In other words, stayed above the mid-Bollinger Band until the point right here looks like about 20 cents. So that was about about a 3-year time span. So you're up, I don't know, 10,000%. So we're just flipping. This is a minor one right now. One reason why I'm kind of stepping into the minor ones, because all the major ones of gold stocks right now have really gone through the roof. And can they keep going through the roof, keep going higher? Yeah. But at some point, they're going to hit a consolidation. And what they're starting to do now, as I actually hinted over the last several months, that they're going to start coming back down to the lower price issues. And a lot of the dollar issues, the $10 issues, the $20 issues, $30 issues, they're up 100%, 200%. Some are up, 1,000%. So that's the reason why the monies are starting to come in on these lower price ones. And here's one. This is kind of do or die. Your 7 cents. Either you make a bunch of money or you're going to lose 100% of it. So take your gamble, but it's doing what it's supposed to be doing. The reason why this is a buy signal, if you look at the volume here, the volume was going up and the stock was going sideways. If you notice, the Bollinger Bands were pinching. It gets a buy signal when you have a sign of strength through the mid-Bollinger Band. And it's kind of hard to see it, but you got it right there. It looks like about, I don't know, September, October, November of last year. 3-4 months ago, you got the buy signal, kind of went sideways, and now we're breaking out above the mid-Bollinger Band, which is going to spread apart the Bollinger Band. So now the Bollinger Band is going to start spreading, and that's an indication that the new trend has started. And this thing built a base basically from 2023 to 2026. It kind of just went sideways, so it's got a huge base. Will this one work? I don't know, but on a monthly time frame, this is a buy signal. Well, not all buy signals will work, and maybe this one will, or maybe it won't, but the odds it probably will. So it's all probabilities. But I got an email from one of your listeners wanted to present one. This is one. So where's your target? Your target's up to the previous highs, so it's up around.
And as you said, when you step in, just to because these are penny stocks basically, and when you're stepping in, that you're risking everything in that. Is that basically the deal? You can wake up and this thing's at zero, and that's basically your risk set up in these types of trades.
Yep. Yeah.
So hear that one, folks, because I love them too. But don't think that you can get into an equity like this and then manage it and take a little stop. They're high risk trades, and man, you get it though, you're going to get a reward for sure.
Yeah. Your upside, if this one works out like it's supposed to, so it's 7 cents goes to what, 35 cents. So what's that? That's a bunch of money, but percentage wise. Here's another thing too. Normally, when you get a low like here back in 2020, you want that low to be broken, and that's the reason why that dotted line's there. And you broke above that dotted line right now. So if you can't hold the previous lows, what the market will try to do is take out the previous highs, and that's the reason why this 35 range is the previous highs. So market analysis, no guarantees. The symbols. SBLRF, and it could go zero because these small ones don't have a big I don't know, they don't have a
I looked it up. I think the market cap of that company, the entire market cap, is $18 million. And just to, trading in and out of them, be careful of big positions, folks, when, that's the other part. But right, $18 million, right? It's like that's the entire company. So, of course, if you're an exploration gold company that's worth only about $10 to $20 million, there's a risk. But as we know in this market, hey, if you got a chance in this market, if you can't make money at 5,000 gold and 100 silver, right, Tim, then they probably got a problem. Yeah.
Yeah, so all this stuff is going to be just a wild time over the next several years. Matter of fact, me and your dad were talking about this back in 2023, and it kind of 2024. It took its time, but it came to fruition here, and so it's going to be fun over the next several years. So a lot of money.
And I was going to say, not that I can't believe, but yeah, it's like 2 straight years already. And man, time flies, but we were at 2,000 a couple years ago. We're at 5,000. It's a remarkable run. Barely any pullbacks, remarkable strength. Tim, appreciate the time as always, the charts, the education. I hope you have a great day, great weekend. We look forward to talking to you next Tuesday, man.
All right, talk to you then. Thanks a lot.
Talk to you then. Thanks so much. Folks, check it out, ord-oracle.com and those great webinars under the services tab. We're coming back for one more segment.